As far as hedging long-term investments, the best thing to do is to buy an out-of-the-money put that would cover your trade. So, but out-of-the-money puts are expensive. So for those of you that have portfolios of 100 shares of stock, so my opinion is most of your portfolio, you should have a minimum of 100 shares. You should buy stock in blocks of 100 shares. If you can't afford it, buy cheaper stocks. The reason for that is so that you can sell premium, so that you can do a covered call, use those 100 shares to get a covered call and bring in premium. Then you take that premium and you use it to help finance the out of the money put. You can't do this unless you have 100. The only way that you'll be able to do it would be with a vertical, which I show you in a couple of different videos. So I'll give you an example. Let's say you have a stock. Let's say you have NVIDIA. Let's say you have NVIDIA and you want to hedge your portfolio in NVIDIA. Well, there's a couple of ways you can do it. You could go to NVIDIA, but it's going to be insanely expensive. So if you look, if I wanted to go say December out of the money put, so NVIDIA's at 190. And now look at all the hedging that's already begun. Look at this. This is insane, right? NVIDIA is a $191 stock. Do you find it insane that there's already open interest at the price of 50 cents, $4, $5, $6, $7.50? They're actually out of the money puts at $10 for December for NVIDIA. Like someone thinks that NVIDIA is going to go to zero. That's what these bets are. But it gets a little bit more realistic. But look at this. 19,000 puts at $19. 17,000 at $20. Look at this. 28 at 28. It's at 191. $28 puts. Look at the volume here. This is not small volume. Crazy, right? It gets crazier. So let's get up to like 150. So now you start to see not only was there open interest, but people today were buying puts. Look at this. At the 160, 155, 150, they were buying it today, out of the monies. The problem, and these are not actually as bad as I thought they'd be. So you could buy the 150 for $92. And if price, dropped, this thing would be an exponentially fantastic. So maybe you'd get a 4x out of it. Maybe the thing makes $350. So this is if you don't have 100 shares. So if price dropped to 160, let's just say, a 30-point drop, and you lost $30, how many shares of NVIDIA do you have? So if you had 10 shares of NVIDIA, you'd lose $300 with a move down to 160, right? So if you bought one put for $92 and it dropped like that and you lost around $300, you'd probably make around $300 on that single put. Do you see it? And you didn't have to get rid of your shares. So mug, do you see? This is one way that you could do it. Figure out how much of it you have. And the best way to think of it is what if we got a 10% move to the downside? If you want to go even more outrageous, 15. You could say 20%. What if the markets dropped 20 frickin' percent? Now that's extreme. So I wouldn't go that far. 15% is extreme enough. That would be about a 30-point drop in NVIDIA. So if you how many shares of NVIDIA do you have? Well, I have 20 shares of NVIDIA. Okay, that's $600. So what you could do is you could buy two $150 calls for 93 cents. Now that's going to cost you 186 bucks. Wouldn't it be great if you could finance that somehow? So let me show you a way you could finance it. It's possible if we go to, say, not this Friday, although you could. Next Friday is earnings week, so I think you'd want to stay away from that. Wait till after earnings, but if you wanted to do it before earnings, you could come up here to 200. You could go to 202 half. I mean, this is a little risky, but I'd be okay with 200 205s, right? Yeah. So this is one thing that you could do is you could sell this Friday's 200. So even if you got a boost to 195, 196, 198, would it hold above 200? Well, maybe, maybe not. If you sold the 200 and bought the 205, you could get yourself $38. Yeah, I'll show you that next. That's the other option here, is you get a $38 credit. So you could get two of these, and that would give you $76. And then if you bought one put for 94, what did it actually end up costing you? Right? It cost you 18 cents to have protection on NVIDIA. So that's a way to do it. Sell some premium way up, but short term, use the money to buy a long term out of the money put. You could go to an ETF. You could go to Soxtel, right? So Soxtel is a bullish ETF, triple leveraged. So you could go here and look at what the puts are here. 43, you could go, what if you went to December and bought yourself the 40 puts? Woo, they're expensive. Wow. So maybe the 30s. So maybe you buy the 30 puts. They cost $1.25. So you'd want to try to get some premium, get that under $1. So there's a number of ways that you could do that. And yes, like all the big boys do, if you had a portfolio that you wanted to try to protect, you could go out and buy VIX calls. The problem with buying VIX calls is they are going to be pretty expensive, very expensive. So if you just went to the 18s, they're 260 bucks just for the 18s. You could go to 20, but they're still over $200. So, and you can see there are plenty of investors buying them up. They're expensive. Is it okay to buy a few hundred SQQQ shares, sell covered calls? That's a risky thing to do because SQQQ is leveraged. So whenever the Qs move, SQQ moves 3 times that amount. So that's too expensive, too risky to do. I think one thing that you could do is go to the 19th and do it, small. Start out with, maybe the 18 halves right here for 80 cents. And then you could go out another week or two. Maybe even go to this, not that far. Go maybe to December 3rd and pick up some of the 30s. So you could do that. But the best way to hedge is by selling a covered call on the stock that you have, way out of the money, enough where you could bring in $1 and then use that dollar to buy an out of the money put for next month or the month after. And if you did that on all of your major positions, if this covered call expires, then you do the next week's. And then you do the next week's. And you just keep doing it. As price is moving down or flat, you just keep bringing in premium and it helps finance your puts. That's the best way.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.